Hello, everyone, and a warm welcome to all our attendees joining us in person from Columbia Business School in New York, and also to everyone joining remotely from US and India over Zoom. We're excited to kick things off with a fireside chat on the rise of fintech in India. But before we begin, just a few housekeeping items. This session will last around 40 to 45 minutes, with around 10 to 15 minutes at the end for audience Q&A. Feel free to keep adding questions in the Q&A box at the bottom of the Zoom screen, and we'll try and get to them towards the end of the session. With that, let me set the stage for the discussion with an overview of the session and also an introduction for our esteemed speakers. The conversation on the evolution of banking and fintech are foundational to our conference theme, Limitless in India. As one of the world's fastest growing economies, India has undoubtedly emerged as a fintech hotspot in recent years. There has been a massive adoption of digital payment systems in India, but yet a huge population of India remains underbanked and underserved. These factors indicate a positive shift towards fintech and present a massive growth potential for the industry. To speak to us about the present and future of fintech, we're joined by Mr. Ashwini Tewari from the State Bank of India, India's oldest and largest banking group. Mr. Tiwari is a career banker who started his career in SBI in 1991. Presently, he's serving as the managing director and a whole-time director, handling the portfolio of international banking, information technology, and associates and subsidiaries of the bank, including major non-bank businesses like credit cards, asset management, life and general insurance, etc. Mr. Tiwari is currently involved in a big refresh in the technology space in SBI. Thank you so much for joining us, Mr. Tiwari. To moderate this conversation, we are also joined by Mr. Sumit Maniyar. Mr. Maniyar is the founder and CEO of Rupeek, which is India's fastest growing asset-backed digital lending platform. Mr. Maniyar's vision is to make credit accessible to Indians in a convenient and cost-efficient way. Mr. Maniyar is an IIT Bombay graduate, and after clearing all 3 levels of CFA, he worked as an equity research analyst for both JP Morgan and Religare. Post that, he joined his family business and overhauled it from being just a trader of seeds to a full-stack producer and marketer of agricultural seeds, which has increased their revenue by more than 3 times. Sumit is an entrepreneur through and through and is dedicatedly contributing to the ecosystem in India by mentoring young startup founders. Thank you so much for joining us, Sumit, and I'll hand it over to you now to take the discussion forward.
Thank you so much, and it's a delight to be here. Welcome everyone to the 17th Annual India Business Conference organized by Columbia Business School. It's a privilege to be here, and it's a privilege to host such a special person, individual, a veteran banker who has decades of experience in building India's one of the finest banks, that to a public sector bank we can take pride in. He'll be sharing his wisdom and invaluable experience with all of us. I think sir, I'll jump right into the questions, and I have been eagerly personally waiting for this session. Very fortunate to speak with you one-on-one. So let me start. Your experience comes over the several, chasm crossing of Indian financial services industry. You have started your career as a probationary officer in the 90s, early 90s at SBI, and then the dot-com happened, and then again 2000s, CIBIL introduction and scale up of that. And post 2015, there is new animal on the horizon, which is fintechs. Now, what I would love to understand is, sir, this evolution of chasm crossing from the 90s, 2000s, and now 2015 onward, from lens of 3 different individuals, 3 different stakeholders rather. One is customer, second is how the regulators and the policymakers are thinking, and third is the financial institutions themselves, whether you call them fintech or banks. How this has been, sir?
Thank you, Sumit. It's really a pleasure and an honor to be here at the Columbia Business Conference. I was there in person in 2018 and 2019, and after that, of course, we know what happened to the world. So this question actually brings me back to, forces me to think back, and I would argue even before I joined the bank, we have lived, our generation is the one which has between the boomers and the Gen X's and the Gen Y's and Gen Z's. So we are those who we have stood in queues to get kerosene oil to gas and all that stuff. And we have seen our father book a scooter, Bajaj Super Scooter, and it came in 14 years. So that's the scenario we have seen. Telephone lines coming in 5 years, cement under control, all of these were my growing up years. So having come through all that, and then we have seen this coming of color television in India in the Asian Games 1982, and followed by the Doordarshan and then the various channels. So very, very interesting times. So when I joined the bank, and I had come from an engineering background from Steel Authority of India from the shop floor. So I had a very different worldview about how things work. And suddenly to come into financial world, which wasn't my natural world. So when we started in 91, at that point of time, it was all manual. We had the real books of accounts, the ledgers, thick set books, very heavy. So if you have to transfer one ledger from this table to that, that took some doing. And generally the people who did that had well-built muscles to handle those. So from there, and we used to deal with tokens and all that stuff, which today seems esoteric. Today, everything is in the system. So when we started, very interestingly, the conversation then was not around business. Business was a game, and people were coming. There were not too many options to customers. So they were coming in, and there were queues, etc., all of that stuff. There were no private banks. There were some foreign banks, but they were serving a very elite segment, credit cards, and a really ultra HNI segment. So therefore, there was no mass competition. And as a result, the discussion was always around reconciliation. Whether books are balanced is on date, whether all the entries are up to date, whether we have been able to apply interest successfully in different accounts. Those were the conversations I remember. So from there, then 94, when we know the private sector banks started coming with a entry-level core banking straight away, day one. And we never had core banking. We didn't even have a front-end computerization, if you will. So from there, then the evolution took place. The bank evolved in multiple ways. For example, 97, 98, we came out with the corporate accounts group, which is the dedicated strategic business unit to handle top corporates. Before that, they were being handled in different branches. And then in 2000 onwards, we started with the back-end computerization first, where the data would be input and ultimately reconciliation on all became automated. But it was again to solve a problem at the back end, not for the customer. So I look at it, as you mentioned, what is the lens of the customer, what is the lens of the bank, and what is the lens of the regulator. So I would argue the first wave of computation was more from the lens of the bank, that how can we solve the reconciliation issue? How can we have automated interest applications so that and these were areas where the unions used to hold us hostage, that if they don't agree, they will not apply interest, they would not do that calculation. So we had a difficulty there. So the first wave actually solved that for the bank. And of course, by 2004-05, we realized we are 10 years behind the retail revolution, which the private sector banks have brought in. So the core banking came in. What is not well known for SBI is that along with core banking, we had a massive business process re-engineering exercise. And the entire purpose of this BPR, which was advised by McKinsey for us, was to bring down the cost to income and also to make it easier for customers to actually transact with the bank in the retail space. So for us, the retail banking, the real retail banking started in early 2000. Now, this is not something we talk about it now. It's now given, and today our retail share is as high as plus 50%, almost approaching 60 now. So from a corporate bank and an MSME and agriculture bank, we could be called a retail bank as of now. So that second phase was more about the customer and of course about the bank, but more about the customer. And alongside the regulator evolved, I would say, because regulator initially, as we know, before 91 reforms, banking was such a controlled activity. We had interest rates on both deposit and advances published by the regulator. All the policies were approved by the regulator. Who can we lend to? Who we cannot lend to? All of that was decided by the regulator. So there was very little leeway that the banks had for doing any innovation on their own. But the regulator evolved, and in the 90s, actually, all of this, most of this was relaxed. So that was a very interesting period from a regulatory perspective. We were getting a lot of leeway, but we were not ready from the technology side in the 90s, which we made up in the 2000s. And by the early, 2008, 2009, just before the GFC, we were done with the computerization. The entire core banking was in place. The online banking was in place. So that was there. The customer's interest and the bank's interest actually coincided. And regulator, of course, continued to support all this while. And then quickly thereafter, we came to the mobile bank. I mean, this again was something which There were some early entrants, but I would argue that as at the State Bank of India also, we were able to bring up a mobile app very quickly, which was fairly robust, which was fairly good, and saw a very good pickup. But we also have very, very hardcore online banking customers who don't want to shift to anything beyond a desktop from online banking. So that, and then progressively from 2016 onwards, we had the real digital push, which is the YONO app, super app, which got designed in 2016, 2017. And today that app has almost 40 million plus customers. So clearly is something that we have evolved. Of course, in all this journey, the basic thing about a customer every time has been one, how does this make my life simpler and convenient? How does it readily allow me to do my transaction and also to reach out and approach the bank or its staff when needed in a simple manner? And how does it reduce my cost? Most customers don't want to visit a branch unless there is an advisory or something they want to ask. But all the talk about complete digital, I think there is a very strong element of the advisory and the branch experience necessary, where the customer just wants to bounce off. Like, look, I want to buy this property. I want to take this housing loan. Is it good for me? As you say, you are in the gold loan business. He wants to know that, is it safe for me? Will my gold be returned to me? No, these are not questions which can be answered by a contact center or call center. This is where you need a face, and this is where you need a person to go back again and again. So those are the elements from the customer side. As far as we are concerned, we have evolved, but there are still challenges in terms of upgrading our workforce. I mean, I remember when we had the first computerization where our employees went to a mouse. Many of them have never handled a mouse. So some of our regional managers and branch managers actually very innovatively first gave games to the employees to play games, because if you play games, you have to move the mouse, manipulate it fast. If you can do that, then you can surely transact and reach a particular icon on the screen in terms of reaching something. So those are the kind of things which we have gone through. But we have come a long way. Most of our staff today, the front end staff is very young. They are in the early 20s, most of them. So they are anyway savvy. They are naturally savvy to everything digital and everything social. So we don't have a challenge in that sense. But yes, this upgrade and this technical skills is a journey, and this continues as we speak. We are hiring from the market increasingly. And finally, on the regulator side, the regulators mandate, in addition to stability of the system, in addition to overall orderly growth of the market, those are the two broad objectives. So therefore, the latest objective, which I find in digital increasingly, is protection of the customer. We all know the biggest challenge as bank, and I'm sure it applies to all non-bank digital players, is how do you protect customers against frauds, online frauds, against cyber issues. It's not so much a hacking of the phone per se. It is more of the social engineering kind of issues which are plaguing the system today. And these require a very high level of not only security at the bank and the other players' side, a very high level of collaboration between law enforcement, between banks, non-banks, because much of this money goes from one bank to, let's say, a Paytm wallet, to another third wallet, to ultimately another bank. It happens in minutes. And by the time realizes, multiple ATM withdrawals are already taking place as we speak through mule accounts. So it needs a very, very big systemic intervention. And that's something which is work in progress. All of the agencies, certain, the RBI, the banks, law enforcement are working together. But again, law enforcement also needs a lot of upgrade on the digital side. So we're working together and we are seeing some early success. Some 2 days back, you might have read a news item about SBI fraudulent apps being used. But actually, that is a success story where SBI's cyber team were able to photograph some of those fraudsters in real time, and then were able to reach law enforcement. And the raids as a result of SBI's team actually putting it out. So therefore, I would see it as a success story. But this is a very, very rare kind of success story. We need much more system level intimation. So that's what a journey in a very few sentences, if you will, because it's a vast subject. It's the entire career as I see it.
I had asked India's largest bank's evolution in 5 minutes. So a little bit unfair to expect that it can be summarized any better. Thank you for sharing that, sir. I think the biggest takeaway for me is that there has been a constant evolutionary attempt and pressure from within SBI, from market conditions, to keep on evolving. And the big insight there is that the evolution to be done in such a large institution, the mouse and this example, it's so real. And so I can imagine we are a fraction of a mid-sized bank size, and the human capital training is such a big challenge, and just getting them up is such a big challenge. So these are practical limitations which are coming, which actually interestingly, sir, brings me to my next question, this evolutionary challenge and how SBI responded to it. I don't know if many of our participants, viewers here realize this, that sir has also led a massive card business, India's largest card, one of the largest card businesses, one of the most advanced state-of-the-art institutions, which is known as SBI Cards. And there, sir, you had brought in all payment aggregator, you opened it up to private institutions to partner with SBI Cards, which was something unheard of. So one of the things which I want to talk about is, how do you devise a strategy? What is the insight? How do you go about devising the strategy, the insights that, okay, whether it was a transformation of SBI or whether it was transformation of SBI Cards, because these are behemoths. I mean, truly speaking, these are like the oceans, and changing their tide is a monumental effort. How did you go about, if you can specifically on SBI Cards, sir, because it has also seen a transformational journey in your leadership? What was the strategy like? How did it impact your staffing and org design requirement? And a little bit, how did you change the culture on the operating cadence? Some color, sir, would be very helpful for all of us.
Yeah, thank you so much. So before I go to SBI Card, I mean, on SBI, actually, as you know, SBI is a 216-year-old institution, and we were the central bank till 1935. So we were issuing currency notes. So we have that experience as well. Tomorrow, if RBI tells us to issue currency notes, as is allowed in a few countries, I think we have the necessary experience and the credentials. So we have been refreshing or reorienting ourselves every decade, I would say. As I mentioned, the corporate accounts group example of a strategic business unit. Similarly, the BPR in the early 2000s and the mobile evolution thereafter. So every 10 years, SBI refreshes itself. Now, I completely agree with you that it's a very painful exercise, because changing something in a large bank like ourselves with 22,000 branches and 245,000 plus employees, to reach this message to everyone, the necessity of it, and then to make them work towards it from whatever they were doing earlier is massive. But what I have seen here is that SBI is probably one of the few large institutions whose DNA has this. So once we decide on a particular course of action, then everybody aligns very quickly, and there are challenges alongside, no doubt about it. When core banking first came in 2000, I remember I was in one of the branches then, and many times we were not able to find our own loan accounts for customers, because suddenly the customer from a book suddenly went to the bank's server somewhere, nobody knew where. So we were kind of searching where the customer has gone, and we were not knowing how to transact that customer, and we had to devise ways like putting that in a register and saying, okay, when we find your account, we'll make sure that everything gets posted. So those challenges happened, but we went through and we were successful ultimately. We merged 5 of our banks on one date in 2017. So that again took a lot of work. So people are used to these kind of disruptions, if you will. So coming now to SBI Card. SBI Card is a much smaller company. It has about 4,000 plus full-time employees, but it also works about 40,000 plus employees of the vendors. So which is again a challenge by itself, that when you have such a large workforce which you have to work with, you keep hiring, people keep leaving, all of that. This is not something we are very experienced in SBI. In SBI, people come for life, and okay, there are attritions, but nothing like 25-30% attrition in this space, which the vendor space I'm talking about. So these are people on the street, which, I mean, you have seen at airport and all, people trying to sell you cards. Those are the guys who are on the vendor roles, and those are the people, and there's heavy attrition there, because it's a tough job. I mean, I wouldn't want to be standing at an airport or a railway station pitching cards to anyone. You know, out of 150, maybe 2 people stop and listen to you, the rest of you brush you aside. So, but SBI Card, as you know, was a partnership between G and SBI. So SBI had the front-end company at one point of time till 2014, and the back-end company, the tech company, was G, majorly owned by G. So G used to run all the systems and all their processes, etc., etc. SBI was responsible for marketing and the risk. However, in 2011, just after the global financial crisis, and also because there was this process in the industry of lifetime free cards, a lot of such cards were issued and they went bad in the crisis. So that was a real moment for us as to reflect on. And then we decided to actually buy out GE, and GE also decided to exit. So both came together, and SBI sent its own people as CEO and all. Earlier, they used to be GE CEOs. And then we actually took a fresh look at everything. And then we realized that, look, this is not going to work out unless the bank's own customers are cross-sold to. Now imagine earlier SBI card wasn't even giving cards to banks' own customers unless even if recommended by the bank. It was so elite, I would say. And since this started, what we have devised, again, it's a very interesting story. This is called Project Shikhar, whereby banks' customers are scrutinized for various cuts of income or transactions, various things, with a model devised jointly by SBI Card and SBI's analytics team. This is hosted on the CIBIL, and this data set moves to CIBIL. It is run off against the CIBIL bureaus, checks, and various other models. And then these customers get offers from the bank side. After this came in, the bank's share of fresh cards has gone up to almost 50%. From about 20% 4 years back. This is just to 2017. This is just 2017. So total of about whatever we have, 12 million customers. Now it's about 50% from where it was about, as I said, 15%, 20%. So massive thing. So it is a mix of technology. It's a mix of selling to the bank's customers, which is what we should have been doing right from the beginning. I mean, why would a large bank with a lot of customers not be able to sell to its own customers? So this entire cross-sell piece actually got finalized here. And finally, on the tech side, sorry?
No, this is fascinating. Sir, I just want to appreciate it because, being a public sector bank, these are bold calls where there is a data privacy issue. There is ultimately, these are two different institutions governed by different value system. So for them to pull this off, it's nothing short of a feat. I just want to bring that appreciation out there. Would love to know, sir, how did the actual mechanism trigger? Was it the SBI branches which were facilitating the process, or how did the licensing of two institutions happen?
So this took some doing, and just to clarify, the data protection is clear because the data doesn't travel to SBI card. That's very clear. The model has been devised jointly. The analytics model, it sits within SBI. And SBI's own database is seen by its own people in the analytics department. And after the first cut is there, the CIBIL refresh happens, and after which then the data is available to SBI branches, not to cards. And this offer is made to the customers. And of course, the consent is documented as it should be now. Now the RBI says explicit positive consent. Earlier, there used to be kind of an implicit consent. So that evolution again has happened with regulators intervention in that sense. So after the consent is received, and then the data flows to SBI card for them to do their own underwriting, etc. And since the model is jointly developed, the pickup rate here is very high. I mean, very few rejections and on, unless there are some things found later, because the CIBIL checks and all, everything has been done. So therefore, the very high conversion, and the speed is also pretty fast compared to the regular on the street or the open market kind of conversions. On the other side, what SBI card has done very well, because it was not part of the bank. It is the only standalone card company. So therefore, what it has also done well is that it has had multiple industry partnerships. You've talked about that. So we don't have one big partnership like, let's say, a couple of the competitor banks have. They have one very large partnership. Both of them have with the leading e-commerce players. So while that helps them in a big way in terms of very quick turnaround and all, but for us, it's the niche and the value which is brought about, let's say, by a Fab India, by a health card, by the IRCTC or the railway card, so BPCL petrol card. So we have cards for almost most of the segments, airline included, all of that. So therefore, while the individual numbers in each category might be not very large, but I think we offer such a choice to the customers. So each customer potentially we can offer 20 cards in different segments. If he wants to go to a hospital, there's an Apollo tie-up. He can even buy medicines from Apollo pharmacy and get points and get discounts there. You can go to a Fab India and buy a good outfit or a good gift for anybody. He can buy a Pulse card, which is a health card, health club tie-ups. So multiple tie-ups. And the latest, of course, is Aurum, which is the which is the real blue chip card offered by invitation, etc. So we have all these channels. Now, at the back of all this is a very strong IT backbone of a data lake, a data warehouse, and then latest, I mean, in this year we have developed the instant issuance capability, and that I believe will help us to actually offer the card to entry-level players. I mean, people with a thin CIBIL file, let's say students or just into job. Earlier we were not able to give it to them. So that again is the next phase. And third, last phase, which I want to talk about is the buy now, pay later. SBI card is now going towards that by issuing an instant card, and a small level purchase perhaps can be funded. Again, we are looking at a partnership with other BNPL players. So very, very exciting journey. My role in all this is just 1 year, so I don't claim any credit before or after. Today I'm on the board of that company, so maybe I'm involved in the strategy also today, but I don't claim any credit for previous things. Those are done by the company and its people.
So you're too humble, but the board shapes the feedback of, serves as a guiding principle for the management, and it certainly has a big role in terms of the last strategic decision, which typically defines the contours of future growth. No, very helpful, sir, and quite insightful. The way SBI cards you described it, almost as if I was listening to a young startup's description of being able to underwrite new to credit, being able to integrate with BNPL. And this is very disruptive when you think the roots belong to a public sector bank. In fact, in my personal roles, I have dealt with other public sector institutions. I must admit that SBI is a different stature in that league of PSUs. I don't want to comment on others, but the way this disruption has happened of SBI cards and within SBI YONO and a lot of transformational projects, these are quite breathtaking. What I want to understand, sir, is that now that there is a force multiplier post 2015, and there are a lot of fintechs and a lot of young entrepreneurs jumping into the sector. By the way, on that note, Jimit, my colleague, if you can host a quick snapshot of how the landscape on fintech is looking like. This is something which SBI team has put up, and would love to see if we can quickly share that on the screen.
So Sumit, while he's doing that, actually, just to tell you, I mean, we have about 12 subsidiaries, out of which 2 card and life are listed. And the initial investment by SBI in all of these subsidiaries, the capital is just 6,000 crores. The valuation of SBI card and SBI life together is 1,80,000 crores as we speak. I mean, of course, it goes up and down. And there are multiple others. Asset management company hopefully will be listed later this year. So, and we are hoping to see a good, because number 1 in the industry by far. So we are hoping to see some good traction there as well. So the kind of value which has been created by SBI, and the secret sauce is there's no secret sauce. The secret sauce is it's a good mix of SBI's top management with a longer term vision, not short term quarter by quarter approach, and the management entirely from the market. It's all market driven. So the best of the market and the public sector is, I would argue, this is a fantastic combination. Maybe could be emulated in other areas as well.
This is phenomenal, sir. I mean, did I hear that number correct? Was that 6,000 crore the capital raise?
Yes, it is. That's true. It's 6,000 crores. And this much we've already gotten back. Much more than with that we have gotten back by stake sales, by dividend, and all multiple times of that. And the other market cap continues to stay.
I don't know if how many investors or the venture capital and private equity are listening. This will put majority of the investors as well as young startups in stress. The kind of wealth creation number you're talking about.
They should partner with us, and these are all profitable companies. None of them actually depend on investor money to. I mean, no comments on anybody, but they're profitable. Okay. so very quickly, just
this is something, sir. This is something which all of us fintech can learn from. And particularly, I'll hold my question for a moment. This is just for everyone to share. This is the roughly how from A to I, SBI team was kind enough to put up the detail about how retail lending, SME lending, and to the crypto and Web 3.0. And I'll have we have a question from the audience, which we'll try to cover towards the end is, we want to, they have some questions on the Web 3.0, but we'll try to cover if time permits. So this is the landscape of where India is today. As you can see, sir, there is a force multiplier in every sector. This is again your data only, but there's a force multiplier. There's an innovation which is going across the board. Next slide, please.
Absolutely. And can we just stay on that slide for a minute, Jimit? Just one
Sure.
sec. See, the important thing from our perspective as a bank is the second and the third rows. The second rows tells us the revenue pools, net of the risk. So that you see is very significant in trade and supply chain, where today there are slightly lesser number of players, but I don't bank on that. We will have many more. And payments, of course, is already disrupted. Credit cards, again, so many new players coming in with hopefully no path to profitability at the moment, but we don't count on that. And of course, the last row, where ability to partner and the potential threat, those are important, because at the bank we feel that fintechs are not a threat. If we can partner with them, it's win-win for both. Can we go to the next one, please, now? Yeah, you want to talk about this, Sumit?
Sure, sir. Sure, sir. So I think some of the startups, as Indian evolution has happened of the fintech, we first saw the payment side. Before UPI, there was a big party going on, and sir, credit to you and the government, how you have shown the true disruption should happen collectively, as because SBI was one of the biggest stakeholder to make the UPI successful. And having that disruption in payments has opened up now digitization of data, which is available for retail lending, SME lending, wealth tech, and even the insurance tech and fintech is in general as a sector is benefiting from all of the digitization of payments which has happened. Of course, we cannot ignore the crypto and Web 3.0, which is the next next big thing which is going on in the industry. There are again polarized opinion in terms of what the future might hold, but there is no doubt about the Web 3.0 technologies, where it holds a great promise. The blockchain or the identification and security and the universal trust equation getting solved with the technologies of Web 3.0. So we'll cover that in a moment, but this is very helpful, sir. The lay of the land is quite clear. Sir, one big question we have, we can just turn down the screen for a moment, guys. One big question we have is, sir, there is a two sort of disruption happening simultaneously. One, you have finance guys such as yourself, the veteran bankers who are trying to come into the sector and take it with some disruption. And of course, I mean, this is YONO is one example, cards is another, but I'm sure there must be long tail of projects which are going on, which we are not even privy to. That is one spectrum which is happening, and it is happening rapidly. And then there is a second spectrum where you have tech guys who have been hardcore techies who are trying to learn finance. And there are two almost like a parallel swim lane in the industry which is going on. What is your view, sir? How these two swim lanes are going to emerge? How regulator is going to see these two? Is there a learning that for the nation building and for the goodness of our entire society, how these two swim lanes should prosper?
Yeah, so therefore we can't have the old saying of East is East and West and West and never the twin shall meet. That doesn't hold. Parallel lines don't meet, and therefore the swim lanes have to merge. And in my view, again, as we discussed earlier, creating a simple interface or an intuitive interface is the domain of the tech. And we don't actually, we can't solve that problem. We have to use tech's help. We have been using it all the while. So therefore, as long as there is some value add being created for the customer ultimately, or there is some efficiency being generated, I think it's in the interest of everybody to partner. And our approach always has been to partner. So whichever fintech approaches us, and we have a couple of slides just to show who all are working with us at the moment, and how can a potential fintech approach us if they want to. But at the same time, my sense is that collaboration is the need of the day, because for two reasons. One is that the banks, can you put on the slide, please? We can see the SBI thing later. So the banks basically have owned the customers. Now the customers obviously have a lot of choice. So today our customers don't use our UPI handle, then they use, our UPI app, but they use GPay or they use PhonePe, even if they use our handle per se. So therefore they have a choice, and wherever they get the best choice in terms of convenience, in terms of ease of doing and the cost, they would go there. And therefore we have to be there where our customers are. So our partnership with Google, or for that matter, PhonePe, therefore that extends across all these things, that if it is good for customers, we will partner. And I was having a conversation in the morning with the GPay head here as to how can we make it better, what more can be done, how can we do this. The interesting thing, when we looked at GPay and how GPay, PhonePe and Paytm together have been able to take 95% of the payment space away from the banks who were the early leaders, the answer is clear. The intuitiveness, the ease, and the interface is not enough. You also need to have an excitement in the transaction. As bankers, we are taught not to be excited about anything. So we don't know how to make a transaction exciting, but clearly GPay and PhonePe have made this exciting. You have the scratch cards, you have the points, you have all that loyalty stuff. So that brings you back to the card, and the card piece, the loyalty program in the card is as important as the payment piece or the other pieces of credit, etc. So I think we are learning with these things, but my sense is collaboration is the way to go. All the players who are serious about things need to collaborate, so that the regulator also, if banks and fintechs are collaborating, then there is a structured way in the banks to assess the risk, including cyber, of a potential partner, and also the other risk assessment which happens outside cyber. Once that is in place in a structured manner, there is an audit trail, there is an audit way to do audits. Regulator gets comforted because they look at all these things to see whether things are safe or not. Their bottom line is it safe for the end consumer? If it is not, then we have a challenge. So I think it's important for us to collaborate.
Absolutely spot on, sir. I think as you're describing, it's almost like a summary of draft guidelines for fintech sector, which were published by RBI last year. It's very clear that collaboration is the name of the game. The co-lending guidelines are suggestive of that. The draft guidelines is a suggestive of that. And very interestingly, sir, what you're describing is also, RBI saying that, boss, you need to, as a fintech, you need to learn how to put skin in the game and get regulated. So that, from a ecosystem stability, all the check boxes can be ticked and monitored. So very well put out there, sir. Sir, there is one important point where SBI is a dream bank because of their outreach, the distribution and the might, and even, if you have to put a nation building mission as a startup, and you want to create that dent in the universe, there is zero possibility you cannot be partnering with SBI. How do we go about partnering with SBI? My own startup, we are also, in the process of this. I'm sure a lot of people on the call will be putting up their own firms and startups. And so what is the stage? How do we collaborate? Is it when it is too early, when it is not? Any guidance, sir, on how to liaison with SBI?
Yeah, so we have 2 slides, but I will also speak a little bit more. Can you put up slide number 6, please? So while he's doing that, he's done that. Great. So first thing is that you see the list here. So I wouldn't say any of these are very early stage. These are players who have kind of established themselves and have had a few customers, have had some track record. Because see, as a bank, we are again responsible to the stakeholders, including customers, the government, and also to the RBI, that things will be in orderly fashion. So if we associate with a very early stage startup and include that as part of the bank's setup, that will be difficult because we need to have a track record. We need to see the tech is stable, the security side is good, and there are some customers onboarded. We don't want to be the experimenters. I mean, we can have a sandbox situation, but I don't think we are ready yet to actually bring it into the ecosystem straight away. So you see BillDesk there, who handles part of our payment gateway, one part of it. NECL for the e-documentation. We have Perfios who reads our account statements. That's a new engagement. Pine Labs is not listed, but many of our collaborations on the loans at the POS is through Pine Lab. Fintra, of course, is a new collaboration. Then there is Banket. So many, so on and so forth. Can you go to the next one, please? And many others are in the process. Actually, they're not listed here. So this is a very high level process. So you can apply potentially through the through the corporate website and through emails. There is a POC requirement assessment. So if you are ready to partner with SBI, after the initial assessment, proof of concept is what SBI wants. So as of now, the sandbox is not very stable, not very good. We are working on that. So once we get that sandbox thing, then I think a lot many more can partner and experiment. But before that, we need a POC. The POC activation, if there is no funding, then there is also a possibility bank has a fund through which the bank can fund the startups POC. And finally, the onboarding happens after the POC is successful. So this is a very high level one. What I would suggest is that while the website is mentioned, anybody who's interested, we have the SBI New York branch involved here, and through Columbia, they can get the contacts, or we can publish it also subsequently, either on the Columbia website or wherever we can. On the bank itself is available. So that contact can be made available. But the current process is, one, the startup, if they, I mean, this POC and other things are fine, but we still need a track record. We need some size. So early stage probably is not okay. Late stage for kind of startups with some customers are fine, because we need to see some track record and some size, some bandwidth in terms of capital and all, so that if there is a risk or there is a losses, then there should be some bandwidth on that as well. Those are the basic principles. But I'm happy to actually, because I lead the technology vertical, I'm happy to connect to whoever they want to. I mean, in the case they want to come in, the conversations can be, the connections can be made, and the exact touch points will be published going forward.
Much appreciated, sir. No, I think that's very helpful. Sir, before we take open questions, I had one, being a learner of this industry and sector, I had one question which might be putting you on the spot, is that what is the next big disruption you are seeing in the BFSI? If you can talk about, and there is a whole host of speculation in the market. Payments, everyone knows that government and banks have innovated, so it's gone, and it's reflective, and unfortunately the market stress payment companies are facing. But what do you think, sir? Lending, credit tech, wealth tech, or insurtech, robo-advisory, crypto, Web 3.0, how do you see, sir, and what is the reason for that belief that there is going to be a disruption in these sectors?
So to me, actually, the lending piece, though there are a lot of scaled players already there, the lending piece is the next disruption which we are likely to see, and that too in a small value digital kind of lending, because to have a bandwidth to actually do an assessment offline will be tough to do for many players. So therefore, this piece already has multiple players. What is lacking at the moment is, for example, is a combined solution. So for example, we know that there are players like Khata Book, which give the entire ledger solution. And there are just players who connect in terms of lending to an NBFC at the back of it, etc. And they have a very good interface in the front end, and based on the customer data, which could be either on a big tech e-commerce platform or on a Snarl platform. So the challenge is always the scaling up thing. So what I see potentially, and now with the account aggregator framework coming in, which is live since last year, but not scaled yet. But I feel there's a lot of potential in that area where standardized solutions, where the GST data, the KYC, I mean Aadhaar data, the CIBIL, all of this is going to be integrated. It is already being done. And a lot of banks are doing a POC there, sandbox there. But once in the next 1 year or 2 years, I think this is going to be fall in place. And we would have a situation where very innovative applications are going to be built on top of this. The partnership with banks is the key here, because any bank would be very reluctant to just share data through account aggregator and not being able to utilize or monetize that data. So now is the time to actually partner with banks on this platform, if you will, and even otherwise it can happen, but this is a standardized one, and therefore make use of the entire data set which the banks have. Because banks have so many small customers who are open to not only lending, but also to insurance, to various wealth tech and all of that. But the size is too small, and there is a digital solution to be had. And we have to marry that along with value-add services like, let's say, the ledger maintenance, account opening, account maintenance, and also digital recovery, which to me will become an increasingly important part, because they will be, even if the default is 2-3%, if the bank's number, if you look at those numbers, it will be huge. So how do you make a cost-effective digital recovery is something I think another solution which needs to come in. I don't have any solution at the moment in view. So that's the piece I think lending where it is open.
Makes sense, sir. I think if you are bullish on India, credit has to percolate. If it has to percolate, the beautiful definition of insight is it's always obvious in hindsight. So the insight is very true, and in hindsight, it's making a lot of sense, because unless these things happen, you cannot have a GDP growth rate which is north of 6.5%. So completely.
And we have to, Sumit, we have to take out. See, I am aware that there are many street sellers. I know this because we all been involved at some point or the other in the actual small value business lending. So we know street players who borrow on a day basis at 24%, 2% per day or more. So those are the kind of people who need maybe 1,000 rupees a day or 500 rupees a day or 200 rupees a day. How can we make that digital lending possible on a daily basis, and they can repay daily on a digital basis? Those are the kind of solutions which will actually, India is a land of multiple people, small value. If small value transactions can all be digitized, I think it will take a lot of load off the bank's backend also, and actually spread this lending, insurance, everything has to be micro. The sachet works the best in India. So hopefully we'll see that happen very soon.
That's wonderful. 5 rupees, is the sachet size. I completely agree. Sir, I would have loved to continue, but there are a lot of questions which are piling up. We'll open the forum for a quick discussion. I'll request host to let me know if there are some anonymous questions, some questions from the...
There are some in the Q&A, I guess, about 5, 6 I can see in the Q&A, if you can meanwhile take them up. Yeah.
We request directly to open it up. I'll request the host of the event to take a call, or should I read them out?
Sumit,
Anand, you can decide
yourself rather than getting people on, because that'll take much longer then.
Cool. Okay. We have one question, sir, where people want to understand what is the role of digital currency in India and in Indian banking industry going to look like.
Yeah. So again, as you mentioned earlier, this is a polarizing question. You know the opinion of the central bank, and I partly agree with that opinion, because clearly the digital currency is meant to mimic the physical currency with the anonymity of physical currency, which is it should reflect a true value, source of value, and a sustained and stable value. It cannot fluctuate 20,000 one day and 40,000 the other day, or back down. So that is the biggest challenge, that this system so far is not widely adopted. In my view, ultimately the central bank digital currency is the way to go, because as a source of monetary, and there are implications on monetary policy, stability of the country, and all those other things, which appear to be very larger questions and may not be relevant at the moment, but this scales up so fast, and we have seen in the payment space, before we realize it's all gone. So therefore, we need to lay down the ground rules from the beginning, and that's what the central bank has been saying. So we are engaged with the central bank. They are working on the digital currency. We are working as part of the groups there. Again, once they do it, we don't know whether it is going to be done this year or next. We'll see, because the use cases have to be clear. And the other thing which is there in the central bank digital currency piece is that, look, if the central bank's currency is there, that's the best, most valued and the most acceptable thing. It's like a currency note. Then why would anybody want to keep deposits with any other bank? Now that in India, in my view, will not happen, because the lending piece happens through the bank. Central bank can't lend. And if the lending happens to the bank, the deposits ultimately have to stay in the banks largely. So central bank digital currency, in my view, will be more as a mechanism for temporary stores of value, cross-border, and maybe settlement between banks and maybe P2P, P2M, all that stuff. But the basic deposit account has to be with the banks. If we change this model, then we have a big challenge on the ecosystem. So in my view, the private digital currency, I think we'll have a challenge. Regulator is not convinced. I agree with them, because unless we find a way to stabilize the value and make sure that this stays for some time, a lot of customers will lose. It's good to hear 3x increase, but what if it comes down from 3x, if we bought at 3x to 0.5x, what happens then? So that's a challenge.
That's so spot on, sir. One meme from Elon Musk or one Dogecoin tweet throws the currency off the cliff, and who is going to be at the receiving end? That same 1,000 rupee vendors, because a lot of these guys are putting money, And the most bizarre thing which I find is that, history has taught us that when human emotions get out of hand, there is a reason why we have circuits, lower circuits in the stock market. And that is the, yeah, that is, in a uncontrolled, unregulated environment, that is the only, one of the biggest problem I'm not able to answer to myself when I think about future. So,
the other thing, Sumit, if you just consider, whenever Mr. Nakamoto or whoever it was actually devised this whole thing, the logic then was that, look, the banks are doing their own thing, the central banks are actually giving out credit and liquidity and all that stuff, and there nothing is in control, the value is getting lost, all that. That was the original logic when it started happening. And from there, look where we are. So it is no longer distributed in that sense. We still have those exchanges, we still have the settlement players. 3 or 4 settlement players can together disrupt the whole thing. They can ban you, they can make sure you can't transact. So where is that so-called decentralization? Not there actually.
Absolutely. It's like, I agree. I see what they meant about the fiat currency and how the, Western dollar was being used to create this artificial money. And certainly there are challenges with that approach. But the flip side is that this current approach is not at all justified to replace that completely. So yeah, I mean, maybe both of us share the old school approach, and some people will not find alignment. But I genuinely do not understand a future without addressing these queries. So yeah. So the second question, interestingly, is again on Web3. What would you like to see from the policymaker regulators to encourage the growth of Web3 and blockchain space in the country?
Yeah, so see, the RBI is on record to say that blockchain is a good technology, even though there are still some thoughts around the scale, which has evolved over a period of time. Earlier, about 4 years back, when I was talking to some of the banks who had done use cases in trade and various other transactions, the main thing they talked about was, look, we can't have the scale or the speed or the number of transactions per second, which we find in the regular SWIFT or the regular cross-border mechanisms. I think part of that problem is solved. Today we are halfway through that channel, so it is quite viable actually to bring applications onto blockchain and be able to service customers or handle flows at the speed as they warrant. Still not fully there, but we are halfway or 75% there. So this is going to happen. So to me, actually, many of these solutions like trade finance, for example, it is so there is so much friction in that journey, because as a practical banker, if you have to open a letter of credit and then the bill has to come and the SWIFT. So although SWIFT has upgraded itself quite a bit, and the entire positive identification of the beneficiary, etc., wasn't there at all 4 years back. So all of this, some of this is actually in response to players like Ripple and players and the blockchain theory, because that theory, the verification or the trust is at the center of it. And therefore, it started with that thing that we have to make sure that all the players are correctly identified, the transaction goes to the right person, because otherwise in the previous avatar, there were multiple times when the SWIFT will go to a wrong player, wrong account number, and we will not get to know. And after 15 days, the receiver tells us, boss, we haven't got anything. Where is my money? And then we want to find out through 4 banks in the process, where is it gone? And then each bank will set a SWIFT to each other, pay to SWIFT again for all those charges, and maybe recover from the customer. It was very, very distributed, very, very broken, very, very costly. So to me, that piece is already refined and it's made more efficient and less costly as a result of this challenge. So I think this is a great way to go. In addition to the other piece around the entire exchanges, money exchanges, where this can potentially be a general ledger to identify all the deals which are happening. A lot of good cases. We are not fully there in terms of volume of transactions, but we are getting there. So I think great future for this.
No, that's a very pragmatic approach for the merit of the underlying tech. Being open-minded and embracing it is a very pragmatic approach. That actually brings to the other one of the questions listeners have asked for is how the Indian and the US regulators are seeing, and the banking industry is seeing, the views on digital assets, again specifically to web, crypto, and is there a difference you see on how these two institutions and BFSI sector of these spaces are similarly or very differently taking approach on this matter?
Yeah, so On the US side, clearly there is much more acceptance of the digital currency of crypto. And you see, I remember when I was there till 2020, the New York State, who were our regulators, DFS. So they were engaging with all the players there and saying that in case you want to launch crypto, in case you want to work on cryptocurrency or other use cases, keep us informed. Tell us how you want to do this, how you want to protect your customers, all of that stuff. So therefore, much more acceptance and openness on the US side. I think more so because crypto by itself has become a very major asset class, and the entire volumes in crypto, especially in the US, is very large. So their approach to me is that because it is there in the market, and the US typically doesn't ban anything. I mean, they try to control it. They try to see where the risk can be controlled and how can the customers be protected. That is a broader approach. On the Indian side, because again, necessarily because our finance and our country's financial position is not such that we can take, and our customers' financial health needs protection. Therefore, I think the RBI is very, very cognizant of the fact that we shouldn't allow a broader crypto wave without actual and safeguards in place. So the customers should be protected, and also the monetary policy stability should be in place. The US has enough scale and enough slack on the monetary policy. They can simply print $1 trillion more, whenever they want, and people will be accepting those. So I think they have a lot more leeway to actually experiment some of these stuff, and they are doing that. That's a very broad brush view, I think.
No, that's growing up in the 2008 crisis era. There were austerity measures then and after that incidents across the globe, and for US it was the printing billions of dollars, and then passing the can for the future. The problem to be addressed was something I never understood. And interestingly, sir, how this Russian crisis is going to pan out, where now they have started putting money in RMB. It's definitely an inflection point in the global, but that's a topic for another time. So I'll move on to the last two questions, sir. We'll try and see if we can cover both. One of the questions, anonymous question, is that how the regulatory environment is going to evolve in the future, the future which you envisage, sir, how it is going to be, how Indian regulator is going to behave, and how it will unfold for the BFSI space at large. If you can give some color there.
Yeah, so you see, the regulator again has a challenge in India, especially when the regulators actually have a core cadre of regulators. So they don't come from industry, but generally, unlike in the US, where the regulator can work in the industry, in a bank, or even in a tech firm, come back to regulation. So they have that experience and the practical experience. Here we don't. Here people are, they join as a regulator in an entry level and they retire from RBI or whatever. So my point is that their career, of course, in SEBI and all, we have a slightly different story. So generally, the regulator has a bigger challenge than the banks. Banks at least work with customers. So therefore, one thing is that they talk to a lot of ecosystem players, including banks. They try to learn as much as possible. As you know, RBI has set up multiple sandboxes of various types, various use cases in payments, in blockchain, and various other stuff. How much scale it has taken, I am not fully familiar with that. The RBI people tell us that there are some good companies, good use cases already on. And the other thing is that they have set up their own Rebit, which is a IT wing of RBI, manned by private sector players, to know about the latest tech. One thing which they have done, which again was slightly difficult for us, is that earlier they used to audit us on a sampling basis, which means they used to pick up samples across various products. Today, what they have done is they've gotten a software program which actually captures the entire data. So they take all our data and they tell us, for all your data, so many customers don't have a mobile in their accounts. So many customers don't have a PAN number there. So many customers' data is expired. So we are like, all our numbers, we have 470 million customers. So even if they find 0.1%, you can imagine the numbers which they stand. So RBI has gotten ahead of ourselves, and we find it very tough. So we are asking them, please give us the same program. So at least we'll prepare ourselves well. Otherwise, for us to see what you're going to ask us is very difficult. So they are evolving, and RBI is very, very keen to actually make sure that tech evolves, that customer education happens, and customer is protected. Therefore, and in the cyber side, they are very concerned, and they are working very closely with a whole lot of ecosystem players, as I explained earlier. So we have a very interesting situation here. And of course, different countries have different models and different regulators. But the common theme I see, because I have talked to many regulators over my career, the common theme is we must allow innovation to happen, because that improves the customer experience, brings down cost, and also leads us to the next wave of evolution. And at the same time, the customer must be protected. So therefore, on retail, they're very, very cautious, and they want to know much more than what they want to do in the other segments. So that's how regulations evolved. We can go to the last question. I know we have 1 minute or less.
Yeah. Thank you. I'll just quickly take the last one. This is, Anchit has asked us a question. What is your view on Sri Lankan crisis? Is SBI playing any role in helping out Sri Lanka? Maybe, by the end of this call, Ministry of External Affairs is going to put a WhatsApp message to you, sir. Yeah.
So without going into too many details, I came back from Colombo last night. I was there last 3 days, part of a delegation. And clearly there is an issue in Sri Lanka. There is no issue domestically, in the sense that the domestic currency, the domestic things are fine. But one has to understand that 60% of Sri Lanka's government debt is foreign, which is dollar denominated and other currency denominated, and they have to repay that. And out of their total, they have a net deficit in terms of what they export more. They import more than they export. The two broad elements which they used to have is tourism, which used to contribute almost like to $3 to $4 billion, and the remittances inward, like in India as well. And remittances came down last 2 years. This went up. The tourism was absolutely zero because of obvious reasons of COVID. And then there were the recent developments in oil price hike and all have not helped. And suddenly there was a bunching of repayments this year, which is leading to a lot of pressure. So they have a very difficult situation. They don't have money to pay for the diesel or petrol. There is a 13-hour power cut announced. We saw some of that. It's not pretty at all. The supermarket shelves are empty. They import a lot of stuff. But on a government level, the Indian government is very much inclined to actually help to the extent we can. There is a $1 billion line of credit announced, which SBI is piloting. It will be for humanitarian assistance through exports from India. So fertilizer, food, fuel, all of that stuff. There are other about $1.5 billion lines announced for petrol, specifically for currency swap, multiple others. We are working with some of their banks. We work with we have talked to their central banks. So we have understood, but clearly there's a big problem. They will have to do that macro settlement, without which all these initiatives are very helpful, but they don't solve the basic issue. So that's where we are. It's a tough situation.
I hope the situation in Sri Lanka improves, and thank you, sir, for firstly, thank you for serving the nation via SBI. Really appreciate it. Veteran bankers like you help in building the institution. Thank you for that. And many, many thanks, sir, for taking out time today evening and morning time, New York. This is much appreciated. All of us have taken learnings today about the industry, about how the future could look like and how to liaison with SBI. So looking forward to many such discussions. Thank you so much for your time. Thanks, Columbia for organizing this, and see you soon, guys.
Thank you, Sumit. Look forward to more collaboration. Thank you, Columbia. Thank you, Anand. And thank you the rest of the team which is there, which has made this possible. Thank you very much.
No, thank you so much, Mr. Tiwari and Mr. Maniyar, for joining us, firstly, at the Columbia's India Business Conference, and also for sharing this insightful conversation. I think I can confidently speak on behalf of all the attendees that we're extremely energized by your views, not only on the evolution that has happened, but also the future of the BFSI space in India, right? And one of the core learnings, I think, for our listeners will also be just that the opportunities that you can really unlock by taking that customer first mindset that you mentioned. And we're very excited by the prospect of SBI continuing to collaborate with upstarts and new age startups as the financial ecosystem of India keeps evolving. So once again, thank you so much for joining us.
Thank you very much. Thank you.
All right, so that was a great session. And next, we are going to have Mr. Arvind Krishna, who is the chairman and CEO of IBM Global. He's going to be in room 1, and he's going to be in conversation with a Columbia favorite, which is Professor Madini Singh. Followed by that session, we are going to have a couple of other exciting sessions today, which is One of them is going to be a panel discussion on India's clean energy transition, Mission 2030, which will continue to be in the same room. And then which will also be followed by a fireside chat with Shri Piyush Goyal, who is a union minister who will be joining us at 12 p.m. Eastern time and 9:30 p.m. Indian Standard Time in room 2. The link for that will be shared in chat later. Thank you and stay tuned.